they're bonds being issued by the government that are backed by Bitcoin are a long way off, in my opinion. Maybe I'm wrong, but I think that's a long way off. It would be, I could see it more locally, maybe, but you'd have to a municipality that actually has Bitcoin in the balance sheet in order to do it. They have to have their own strategic reserve. We haven't seen any states do it yet. Texas may. I think that they're as likely as anybody. Texas may do it. They passed the Senate, and I think it's going to pass Congress. And Patrick, the lieutenant governor, I think is heavily in favor of it. So this is it's a possibility. I think it's more likely that you'll see Bitcoin bonds where it's more on the retail level. We have seen, and I talked to Andrew Hone about this. So I talked to him last week about battery finance and how they're using Bitcoin-backed loans in commercial real estate space. But I could see it happening in the retail level soon, where you have. I've seen some companies that are working on this, where you have Bitcoin-backed mortgages and stuff like that, and that would make sense to me to have that, like we were talking about earlier. I think it's still nascent. It's very early stages because Bitcoin is so volatile, still so volatile. It's going to be a small portion of the lending products at this point, but as volatility kind of calms down, I think that market will grow quite a bit.
What do you think in terms of so we've, obviously been kind of running the gamut here of all these headwinds and tailwinds, and where do you see your predictions for, or just what you see coming out? I can't stand saying that, but just like, where do you see Bitcoin price? And again, it's hard to measure in USD price of what Bitcoin is, right? So it's like you're caveating all these things, unfortunately, because there's so much nuance to this. And
it's easy. I hate the question, but it's easy. Long term, I see the Bitcoin price higher, much higher. And that's because of the debasement of the currency. Every single currency that's being measured against it. The only one that isn't debasing as rapidly as gold, But look, Bitcoin's a better version of gold. It's not even close. It's such a better version of gold. I know people like to wear gold and they like to, have it in jewelry, and there are definitely use cases for it, and there's utility for it, clearly, obviously. But there's different utility for Bitcoin, and I think that they're as a base layer, there are going to be a lot of things built on Bitcoin, second, third layer, and they're going to be important to the financial system, and so. That having a trustless system like this it's revolutionary. It's going to change the financial world. And if you just keep it to first principles, this is a network that is backed by 75 terawatt hours of energy, which is the equivalent of 20 full-time nuclear reactors running full-time. It's completely decentralized. It's a digital fortress of network power. And it's nation state resistant. That's how big it is. And that's how strong it is. So just keep the first principles. Don't worry about the price activity. It is going to be volatile. I expect the volatility. I actually welcome it. Why do I welcome it? Well, I'm an institutional professional investor. My hedge fund takes advantages of these drawdowns. We do things that enhance the returns. And we have drawdowns like this because we have the ability to do that. And you do too. If you just leave a little bit of extra powder and you're not always all in and you've got some powder, and you can take advantage of these drawdowns. And that's the volatility advantage of Bitcoin. So, and the fact that it's rising over the long period of time, that gives you these opportunities to take advantage of price swings. And I think it's a good thing. Am I nervous? Nope. Am I optimistic? Absolutely. Super optimistic about especially some of the opportunities we're seeing for the fund. Some of the private opportunities we're seeing for the fund that other investors just don't get access to because we're involved in this space. And that's an advantage. And being involved in this space is a really big deal. And you got a lot of people on the outside that have no idea what's going on here. We're so early. I was talking to a colleague of mine who is in mainstream, and he's a mainstream investor this morning. And, his contention is that everything's priced in. All the good news is priced in. That Bitcoin's at its peak. That's it. There's nowhere to go from here. Will not call his name, but I just think I appreciate the viewpoint. I just disagree. I think that there's massive amount of upside here, massive amount of runway and adoption ahead of us that we have barely seen any of, and I'm super excited about it.
I would love for you to just unpack your thoughts on strategy and Saylor seemingly trying to become the biggest Bitcoin bank in the world. I would love your thoughts on this.
Yeah, Michael's done a masterful job of figuring out a way to do what you said before: borrow in a debasing currency and buy an appreciating asset. And he's done that with the balance sheet of MicroStrategy. He's found a way to do it he's basically monetized volatility. And what I mean by that is that he's found a way to borrow money for free because of buying the Bitcoin and putting it on his balance sheet. It created volatility. All right. So that volatility is valuable to the buyers of those bonds. Why? Because they're convertible. And so when you buy a convertible bond, you want volatility because that gives optionality upside, and it creates value in that bond because you have the ability to, number one, trade around it because it's a convertible bond. You can short stock against it in what's called the delta neutral strategy or delta hedging strategy. It doesn't have to be neutral, just delta hedging strategy, where you're selling an amount of stock that is commensurate with that convertible bond. So you can trade around it. If the stock goes up, you short more. The stock comes in, you cover it. Goes up, you short more. Comes in, you cover it. That volatility gives you the ability to make money while you're just holding this bond. That's why you don't need a yield on it. The second thing that makes it valuable is that volatility to the upside, where Bitcoin is very volatile and a rising asset. These bonds get converted into underlying common at a price that is then in the money. So then you're making money off of that because you got to convert it at a price that is lower than the price of the common stock. And that has happened for some of these bondholders. And so now you've got MicroStrategy has 500,000 Bitcoin, 499,000 and change. And Michael Saylor has stated that he wants to get to about a million Bitcoin. So right now he owns 2.5% of the float of Bitcoin, the supply, and he wants to get to the point where he owns about 5%, and so which would be a million. And so and his stock is trading around that. Okay, so as he's buying, he's created a situation where people expect him to keep adding Bitcoin to the balance sheet, which makes that stock more valuable, and so they attach a multiple to it, and they have attached a multiple as high as 2.5 of common to the underlying value of Bitcoin. What do I mean by that? Well, if you take all the shares, all the common shares, and then you take all of those convertible bonds and you convert, and you treat them as if they've been converted, so you fully dilute the share count. You take all those shares, you multiply it by that share price, and you divide it by the amount of Bitcoin that they have. That's your multiple. So you divide it by the amount of dollar value of Bitcoin they have. So, right now they've got just under $40 billion of Bitcoin, and the stock is trading at about $7 billion valuation fully diluted. So that 1.8 times multiple to that fully diluted basis. It's a little bit lower than it had been. It got up to 2.3, 2.5 for a minute there, and it's backed off. But this is the key. When MicroStrategy borrows money and they go out and buy Bitcoin with it, it's accretive to the stock because of that multiple, because the stock remains the same price or close to it on a multiple basis, then that means the stock is going up. So that's the key, is that they found a way to do that. Is it dangerous to the downside? I mean, Bitcoin would have to drop. I mean, the only way that it gets to be problematic is if Bitcoin drops so low that they don't have enough Bitcoin to pay off a note that's going to mature. I mean, Bitcoin would have to almost go to zero for that to happen. So I'm not concerned about that at all. And reality is they could likely just borrow more money in order to pay off that note because of the volatility. So not really a big concern. Don't think that they have risk of blowing up. And I do think that Michael's strategy, his vision is to create the largest Bitcoin financial company in the world. It will be like the JP Morgan of Bitcoin, where they have got all kinds of products that they've created around all this Bitcoin that they have, 1 million Bitcoin they can use for all kinds of products, collateralized products, lending products, whatever it may be that they want to do. They'll have control of that, where other companies will just not, they'll never get to that size. And so they've got that ability.
If you like that clip, then you definitely got to check out this next spicy clip. I think you're really going to like it. Come on, check it out. But if you want the full version, the full interview, then check that out over here. Come on, do it. I'll see you in there.